All right, everyone, thank you for joining. For anyone that doesn't know, my name is Mario Nawfal. We do this space whenever there's major news, breaking news and major events. We've had, we did marathon spaces when FTX imploded, and we've had guests from Elon Musk to Mick Mulvaney. We had CZ, Hunter Biden, a bunch of regulators. So everyone came into the space, and we broke down the events live on stage and had a lot of people within the company, outside the company, come in and comment on the events live. So it was a pretty crazy times. And here we are again today with Sam. Sam, I'm going to kick it off with the questions. You ready?
Go for it.
All right. So the first question is pretty general, and I think you've been asked this before as well. What's the intention of doing these interviews?
I mean, I think at the end of the day, like, I feel like, I mean, you guys all deserve to hear from me about what happened, and I want to be able to say it.
Is it me or is he choppy, the chat?
I've lost connection as well.
Yeah. So Sam, you're a bit choppy, my friend. So you gotta just fix the internet somehow, if you don't mind.
Sorry, give me 1 second.
Can you hear me? Sam? Yeah, no worries, man.
All right, there we go. Can you hear me now?
Yeah. All right. So the question again, the intention of doing this interview.
Yeah, I think, at the end of the day, like, it's, I feel like you all deserved to hear from me about what happened. I feel incredibly bad about it, and I feel like, I don't know, that's the least that I can do.
All right, so the first question I have, and I know chat has got a lot of questions as usual, but the first question is, there were many other executives around you, and I won't name anyone, and they've been pretty silent throughout all this. So my question to you is, how involved were they in making those major decisions?
I mean, to some extent, I think that there was a pretty big diffusion of responsibility. And I mean, I feel incredibly bad about what happened. I feel bad about everything. And I think
that we're losing the connection.
You're choppy. You're choppy again. I'm not sure why.
Yeah, sorry about that.
Maybe go somewhere with a better internet connection.
Do you have a different connection?
It is not that. But anyway, it should be good for now. So
okay.
Yeah, I think, like, at the end of the day, look, I was CEO of FTX, and like that means that one way or another, like, what happens is my responsibility, and I'm the one person who doesn't get to say that whatever, that wasn't sort of like, that wasn't in my realm, that wasn't something that I was chiefly responsible for, that's something that other people were thinking about. Like, I shouldn't get to say that. And I did massively screw up in, I wasn't on top of shit. I wasn't on top of some of the most important things that I should have been. That's on me. And, I don't think, I think no one was really on top of, international position risk management. And, a lot of people could have been, but I was the person who should have been responsible for making sure that someone was.
How involved were you on the Alameda side versus the CEO and co-CEO at that company?
I haven't really been involved in Alameda for a number of years, and I get, like, periodic high level summaries from them on some of what was going on, but I haven't been making trading decisions there. I haven't been making day-to-day decisions there. I hadn't been paying much attention to it. And part of the reason that I had been paying so little attention to it was out of, frankly, out of a concern about conflicts of interest.
I'll give you the mic because I know that was one of your questions as well, Chet. Go ahead.
Yeah. So SBF, thank you for at least coming here today. Were a customer assets ever backed one-to-one at FTX?
So FTX, it's a margin trading platform. It's a derivatives platform. So like everyone was depositing collateral, putting on positions, long positions, short positions, futures positions, borrows. The collateral that FTX held was equal to the sum of those customer positions, but there were both positive and negative numbers there, and so.
Well, what does that mean? What does that mean?
So, well, what it means is that if you as a customer, if you deposit $1,000 and then, withdraw 1/1000th of a Bitcoin from the exchange, or, use that to sell Bitcoin or something like that, you've put on a margin position there, or if you do it with a Bitcoin futures position, and, many of the customers had negative balances in assets. That's sort of how the platform functioned. And
But my question is, if I deposited Bitcoin into FTX and intended to trade with it on the exchange, or use it in the derivatives, whatever it would I be able to withdraw that at all times at 1-to-1?
So the way that, the way it worked, again, everyone had deposited collateral and people were borrowing and lending from each other on the platform, those assets, and withdrawing them. But it should have been the case that, we could have liquidated any of those positions, that we could have margin called them and sold them off to regenerate whatever.
But was it ever the case? Was it ever the case that there was a 1-to-1 backing of assets at FTX to where, let's say 2018, 2019, was there ever a point in time where there was an actual 1-to-1 backing in the custodial portion of FTX?
So it was always the case.
How was that ensured?
This, if you include the negative positions in that you have positives and you have.
Okay, you broke up. Sorry. We lost your connection after you said it was always the case.
Sorry. So it.
You're breaking up again, Sam.
Sam, are you there?
Damn it. Let me ping him.
He's rugging the space just like he rugged his customers.
Can you see the can you see him?
Hello?
Chat on stage?
Yes, you're back. Okay, we can hear you again.
Yeah. Sorry.
Is your connection fixed now?
Yeah, it's not a connection thing. It's when my phone gets a notification that it cuts out for a second.
Okay. Do you wanna
phone in not disturb?
If you can, put it to not disturb or turn off notification. That'll be good.
All right, give me a second.
And just a reminder for panelists, if you don't mind, we'll open up the mic for the panelists after the questions, please. Go ahead, Sam.
That's a good idea.
Okay.
Right, do not disturb.
So you were telling us that it was always the case.
Well, that it was always the case that the customer balances were equal to the assets, as long as you count the negatives as well as the positives. That if you add up all of the customer balances, positive and negative, that those were equal, to the assets that FTX had. The problem is that there are both positives and negatives there, which is the nature of margin trading. But it should have been the case that at the end of the day, we could have margin called any of those accounts and been able to liquidate them in time.
You did have auto liquidation procedures in place for many accounts at FTX, correct? That was actually part of the system.
That is correct. That is correct.
Okay, I'll get to that a little bit later because there's a little bit deeper dive on that. When did it stop being the case that customer assets were actually backed 1-to-1?
Well, it never stopped being the case.
Well, it has to have stopped being the case, SBF. If people can't withdraw their money, then it's not 1-to-1.
It never stopped being the case in the context of the fact that there were both positive and negative balances on the exchange, and that if you added all of those up, it added up to the same set of assets. But because there are negative balances, because there are people with borrowers, there are people who are short, that meant that the total amount of assets was not the same as the gross sum of all of the long positions put together, which meant that in order to be able to allow everyone to withdraw all assets from the venue, you would have to settle all contracts and close down all open positions and all open margin positions that anyone had. That's the nature of a margin trading exchange. But to that second point, there's obviously a really big failure there of risk management, and that's on me.
And you said that FTX is what you paid the most attention to.
Yep.
So much so that you claim you couldn't track Alameda's compliance properly. Surely, though, you had the time to be checking, on the balance sheets of the company you were laser focused on, right? Like watching the statistics on trading revenues could not have been taking up so much of your day that you didn't have the ability to oversee compliance and user funds.
So I'm not sure what you mean by compliance in context there, but
compliance to legal laws, fiduciary responsibilities, risk management.
Sure. So I think that first of all, I absolutely could have and deeply wish that I had paid a lot more attention to risk management. Like that was a deep failing, and it was a really embarrassing mistake for me to have made. And I think it was a result in part of me getting a bit less grounded and of me starting to get distracted from all of the details of the company. There are still some I was paying a lot of attention to, but not as many as could have been. And I was paying too much attention to higher level things, to long-term strategic goals, rather than spending as much energy as I absolutely should have on.
And you've stated that the markets plunging were a large part of why FTX had to shutter its door. That's essentially one of the reasons. You gave two reasons, right? And one of the big reasons is you said the markets plunged. But if the funds are backed one-to-one, changes in the market prices versus the dollar have zero impact on being able to withdraw funds if it's set up properly. It just needs the dollar. It just means the dollar value of those funds has changed, correct? So technically, that's not a real reason for why people weren't able to take it out. That's a failure.
I think that's not actually how a derivatives exchange works. On a derivatives exchange, and you can look at the clawbacks that a lot of exchanges had back in 2018, the really frequent clawbacks. And the core problem that was going on there was, in order for everyone to be able to realize what they think they have, you need to be able to close down all positions on the venue such that no accounts end up net negative. So you need to be able to take every single account, in theory, liquidate them, close down all margin, all futures positions, such that there are no negative numbers or positions or balances anywhere, and do that. And if you have a long position, if some user has a long position on the exchange and markets start crashing, at some point that position is going to be underwater. And at the point where that position is underwater, that means you aren't going to be able to close it down while still leaving that account with a positive balance. It'll have a negative balance.
It shouldn't be able in a properly managed environment for it to go underwater, right? Essentially, because if we're to look at your terms of service, which says that you can't loan out user funds, it shouldn't be possible for those user funds to end up basically being loaned out to those margins.
So that was one piece of the terms of service, but there are many pieces to the terms of service concerning other parts of the exchange.
Yes, that doesn't change that parts of the terms of service. One, the fact that there are other parts of the terms of service doesn't change the paragraph of the terms of service that says you can't lend out the depositors' funds to FTX trading, and FTX trading could not move them to be traded. And now, granted, when you spoke with Vox, or the reporter at Vox over there, you seemed to indicate that, in fact, funds were lended out from FTX to Alameda, and Alameda then made the trades, and therefore that's why you're able to kind of make the statement that FTX wasn't doing investments here.
So the parts of the terms of service are overridden by other parts of the terms of service. Well, it was the case that I don't know if that was part of the. I don't know exactly.
So was it your intention to use user funds, customer funds, to lend out to others on the platform without their consent?
So if you imagine any futures position that a customer had on the platform, That is a situation where, in order for one side that has a position on to be able to be made whole, it has to be the case that the other side is able to close down their position, that those mark to market gains that they have are conditional, and that they're credited with on the platform are conditional on us being able to liquidate the other side of that futures contract without that account going under. The same is true of all spot margin positions on the platform, and that was spelled out in the terms of service if you read the full terms of service. And so there's that piece of it. There's a lot of other things going on as well, and so I don't want to say that was the only thing that went wrong. It wasn't.
Okay, we'll go deeper into that a little bit later. You were the majority stakeholder by a wide margin.
I've just got two quick questions.
Go for it, Mario.
Chat. Also, I've just got another panelist, chat, who could be jumping in. I've given him the right to jump in to comment on a few points. So if he jumps in, his account is real zero sum. Sam, my question is, was Alameda allowed to remove assets from FTX? And is that how they paid back Genesis and others who demanded to close their loans?
So, all users were to some extent allowed to remove assets from FTX in that, they could deposit funds to FTX, they could withdraw, and they could even withdraw more than they had of some assets as long as it was over collateralized by other assets. So that piece was, in theory, not specific to one firm, and was rather a feature of how the platform worked. That's how margin trading works. It's how collateralized but not fully funded positions work on platforms. That being said, obviously, something really bad happened, and that something was that position got way too big, and I vastly underestimated.
Okay, we'll get into that piece of that in just we'll get into that piece in just a second. After a few more questions. Are you still the owner of Alameda right now?
I mean, there's a definitional issue given what you think of the Chapter 11 process. I was a large owner of it prior to that.
And how much of a stake did you own it?
Chet, before we go down that road, can I just get some clarity on the loan book thing? Because I've got a message here from an owner of an exchange, and he says the following. He says, the way margin trading works is via the loan book, that where people explicitly put their funds to be available for others to borrow for the specific rate. For people that didn't put their funds in the loan book, all those assets should have always been backed one-to-one and never touched. So it's a case of saying that in order for my money to be lent out, you would have had to have my specific permission, because I would have had to put it out there to be available for people to borrow against when they take a position, right?
So I totally hear you on that. There were billions of dollars in the borrow lending book. On top of that, there are billions of dollars of open interest on futures contracts, which is another place where, in order for that to be able to settle successfully, it needs to be the case that that you have, you basically need to have, everyone be able to be liquidated there in time. And so that's another source where this came from. There were some amount of lines of credit given to some firms on the venue. And then there were some other effects on top of that, when stacked together, created a position that was larger than it should have been, larger than I thought it was, larger than I should have allowed it to become, and represented a real failure of oversight and management.
Sam, are you saying that there were people that had their collateral not on the platform and they were trading against collateral that was not actually even in the system? Because if the collateral was on the system, then to liquidate the collateral should have been automatic. But if the collateral was out of the system, so if you're saying Alameda, for example, or others had collateral, but the collateral was not in FTX, then isn't that a breach of the terms of service?
Oh, they did have collateral on FTX, unfortunately. And I say unfortunately, but this was a huge mistake of mine as well, because I should have anticipated, the prospect of this, and should not have
What happened to
allowed
that collateral?
things, but well, it decreased quite a bit in value. And so you look at it decreased by, I think, many billions of dollars in value over a 2-day period, starting on November 6th.
Okay, and yeah, go ahead, Rand. Go ahead, Rand. I'll take that.
So you're saying that the collateral went down so quickly that you didn't have time to liquidate the position quickly enough to be able to get the borrow side and the lend side into equilibrium?
Yeah, I can probably share. I could probably throw some a little bit here as well. The way that obviously works is on an LTV ratio. So when building out the product, the risk management margin system for this runs off a loan to value ratio. So that's how they're deciding on when collateral needs to be put back into the system to bring it back up and to meet that. Unfortunately, the mix between a bank run at the same time as a massive drop within what the people had used on there as collateral. Some of them had FTT token, for example. And when we saw the drop in that, they're unable to meet the LTV requirements. So there is actually nothing there to liquidate, right? In terms of collateral, the actual lenders themselves needed to provide more collateral into the system. And because of what they were providing as collateral had dropped in value, this becomes a massive waterfall effect. So this isn't just an FTX product problem. I mean, the risk management margin system on FTX is great. I mean, clawbacks on derivatives was a very tough thing to tackle. I think FTX did that very well. This is a bit of an oversight on the counterparty risk to FTX, not just FTX itself in this matter. If Sam could probably correct that, that's obviously there's more factors than just the management on FTX's side. There's a counterparty issue here as well, in which what they had collateralized their instruments on FTX against.
Yeah, everything you said there is correct. And it was absolutely a failure of counterparty management. It was a failure of oversight of the account. It was a failure of management responsibility. And it was a failure of understanding or even, frankly, thinking that hard about what a real downside scenario there would look like. Because
you said,
can I add to this?
Hold on, Zero Sum. I appreciate it if I'm able to continue my line of questioning.
And before you do, Chad, just for speakers, just please mute after you speak, just to avoid background noise, because I can't mute you at the moment. My space is glitching. Go ahead, Chad.
Okay. So, Sam, you said that you fucked up, right? And you got the numbers wrong by magnitudes of billions of dollars in regards to Alameda's balances on FTX, right? Now, while we can all make mistakes, right? As a graduate of MIT, that seems highly improbable. So how precisely, I think you need to explain this quite in detail to our audience. How precisely did you mess up a calculation that far in a way that happened to massively benefit Alameda and FTX's balance sheets in a fraudulent manner?
I'm gonna answer the question as if there weren't a few of those words in it, but basically, and I should caveat this by saying that I unfortunately don't have access to most of the data right now. I've lost access to a number of the systems, and so because of that, this is all piecing together. From my recollection, from the pieces of data I have been able to find from the analyses I did in the days shortly after the crash. So these are all going to be approximate answers, and I apologize for that. I don't have the exact ones, but the
you referenced an accounting quirk, correct?
Yes, that's right. So,
what is that?
So what happened there was the following, and I think there's some tweets, about this that sort of reference this fact. You scroll back to 2019 when FTX was first founded, and at that time we were trying to get bank accounts for FTX. We couldn't. We eventually did, a few years later, but 2019, 2020, we couldn't get bank accounts that could take customer deposits for FTX. We obviously were operating crypto wallets and had crypto deposits and withdrawals, but some customers, generally ones that had in many cases sort of like foreseeing relationships OTC with Alameda, would wire money to to Alameda Research asking to be credited to their FTX account. And they'd wire it straight to Alameda. And then we would do a ledger transfer on FTX effectively from Alameda to that to whoever sent that wire transfer in order to credit them. Over the last few years, we transitioned away from that system because, over the last few years, FTX was able to get its own bank accounts in its own name and, straightforwardly take customer deposits through that. There are legal documents drawn up around that payment service relationship. I didn't know the details of those, and there was an accounting system built out for it that I know the details of.
Who built out the accounting system?
It's a set of developers. It's
at your direction or at someone else's direction?
I honestly don't remember. It was 3 years ago and 3.5 years ago. And, I think that I was probably involved in some very high level discussions around it, but I don't remember and I don't know if I ever knew exactly who was involved in making exactly those decisions.
Why not?
So, Chet, do you mind if I just ask a question? You mentioned that people were depositing money into Alameda, and then Alameda was doing a ledger transfer to FTX. Isn't that highly illegal, though, specifically in an exchange environment? Isn't it illegal for a related party to act as a middleman between a customer and an exchange?
I don't think so. Can you point to in what way? Sorry, obviously it can be done in a poor manner. Like you could implement it in a way which is not okay. And I think it should be disclosed, which it was disclosed. So
what was Alameda's role? What was Alameda acting as? If I was putting money into Alameda and that money was appearing on the FTX exchange as a credit in my account, what was Alameda's role in that structure? Because they would need to have a money transmitting license or a broker dealer license or something if they were accepting money from a customer that was then landing up on an exchange. No.
None of this was on FTX US. And by the way, FTX US, to my knowledge, is fully solvent, fully funded. There's nothing strange that happened there, to my knowledge, and I think should be returning all customer funds and should be opening up withdrawals.
Why did you file it for bankruptcy then?
I'm an idiot. I don't know. I was given poor information by lawyers. I was pressured very heavily to do so by people I no longer believe were acting in the interest of customers. It was 4:30 a.m. I was extremely exhausted, being hounded by many people. I made yet another really poor judgment call.
Before we go to the bankruptcy.
Hold on a second, Mario. This is an important question. Who all was there at that meeting?
I was speaking with legal counsel at the time.
Were your parents present at that meeting as well?
I actually don't know if I'm even allowed or supposed to say who is there, but
the first day, the bankruptcy declaration seemed to say that that was actually the case. At 4:30 a.m., you finally resigned with your parents. There, you were convened with the lawyers and the parents. So why are you hesitant to mention the fact that your parents were present to that meeting?
I'm in general hesitant because of there are limits to what you can say about some conversations that involve legal counsel, and so I was just being hesitant out of an abundance of caution there. But if there's an importance here that you want to dive into, I'm happy to do it.
Well, no, I'm just interested here. I mean, you said you're not really interested in taking your legal counsel right now. Who's representing you right now at this stage?
Oh, I do have legal counsel right now. I have new legal counsel, and
okay. How are you paying for them?
I need to ask one question before we're moving on to a topic. One more question about the Alameda getting the funds. So just quickly, and I'll give you the mic back for the line of questioning. So the dollars, Sam, that were sent to Alameda because FTX didn't have a bank account. So they were used by Alameda like it's their own money when they were really customer assets all along. And Caroline knew. Is that correct?
Sorry.
Can I kind of extend on this question?
Sam, no, because the question wasn't asked to you. This question's
no. So let him. Real Zero Sam brought it's okay. Zero Sam, just extend quickly to that question, and then I'll let Sam answer it.
Yeah, I just to extend on it a little bit. In regards to the funds at Alameda, was, obviously we saw Brett and we saw Sam leave from obviously FTX US and also Alameda sometime last year, which kind of leads to I guess a highlighter point that something went wrong back then. What position, do you know of a position exactly that Alameda took, or was it with the collateralized instruments we were talking about earlier? Did perhaps, say, Sam, Tribeca or Caroline, did they happen to get involved within the Luna and the 3AC crash? Was Alameda obviously victim to that? Because looking on chain, it seems to be that's where the volume started to drop off. The FTT token started to need to really be pegged at 22. It seems like that is the around about the time that you guys really suffered a liquidity crunch through Alameda that needed to be plugged.
There were a bunch of different questions there. I'll try and go through some of them. I'm not going to remember all of them, but going through some of those. So, as for why Brett and Tribeca left, I don't think it had anything to do with this. I think and they can talk for themselves about why they did. But from my from what I knew, I think it was entirely. I think it was personal. In terms of talking about timing, I don't have granular detail here. I don't have access to that right now, and I wasn't running Alameda, so I don't know exactly what happened. I don't believe that there was a large loss coming from Luna itself, but I do think Alameda was probably quite long the market in general, that it had a net long position, and that the general market collapse that happened then did decrease its asset values a non-trivial amount. I think there are a lot of other questions asked, but
it's okay. So I'll give the mic back. So I'll give it back to Chet. Chet, I'll let you continue with the line of questioning, please.
All right. Now, you've claimed that Alameda's trading ties with FTX had lessened significantly over the years, correct?
Yeah.
Yet data from Arkham Intelligence and reviews of public blockchain records show that over 50% of Alameda's deposits and withdrawal volume since early 2018 had gone through FTX from all data analyzed prior to August 31st of this year. Their data also showed, quote, 22% of on-chain deposits and withdrawals to FTX digital wallets interact with wallets belonging to Alameda, close quote. And Anchain.ai was also able to reveal that from June 1st until July 22nd, Alameda's known wallets were the largest stablecoin depositors and sources of liquidity to all of FTX's known wallet addresses. And your firms were made aware of this data, correct?
So, just to kind of jump ahead of some of this, I think those are all very similar statements.
I prefer that you just answer the question. Were your firms made aware of what I just asked you?
I'm not sure. I was vaguely aware of some things related to that.
Bloomberg reached out to Alameda on September 14th about this, did they not?
I wouldn't know. I'm not Alameda.
You own Alameda. You wouldn't have been consulted on any press. You weren't consulted on anything that had to do with press in Alameda, ever. Is that your plan?
I don't know that I can make a statement about ever. I can't remember having been consulted on many things related to Alameda Press. I don't remember this particularly coming up, and I think I may have been.
Well, but you just said a few seconds ago that you remember something kind of like this.
Sorry, I remember chatter about some things like this in the crypto
That's interesting because you just contradicted yourself. So this means that you would have been aware of an issue already ongoing at a minimum as far back as September. If we're to believe that you didn't know anything prior, right? So why would this not cause you to look deeper into something that would appear to show, years after you claim the separation had waned, that Alameda still had too much power on FTX trades?
So can I answer the question now?
Yeah, go ahead. Chet. Please allow Sam to answer, please. Chet. Go ahead, Sam.
Yeah,
okay.
Go ahead.
Thank you. So I'm not surprised by the fact that Alameda was a large fraction of stablecoin deposits and withdrawals on FTX. That doesn't surprise me at all, because Alameda was, first of all, a large fraction in general of stablecoin deposits and withdrawals and activity in the crypto ecosystem. But second of all, specifically did do a lot of cross-chain conversions of stablecoins with and through FTX. So in terms of raw notional of blockchain, and particularly of stablecoin deposits and withdrawals, especially just in a sort of like zero-sum way where there would be some deposited, some withdrawn, that doesn't surprise me, that Alameda had a significant footprint there. However, and in retrospect, I certainly wish that I had done a much deeper dive into Alameda's positions and balances and the history of that on FTX, and that was absolutely a huge oversight.
Why didn't you when there was chatter about this, though?
So the comments that I had been making were around its trading activity. And Alameda's trading volume on FTX had dropped from something like 45% of volume in 2019 to something like 2% of volume in
And is that public
2022.
record? Is there any way to verify that claim?
I've said it many times. I don't know how one would verify it publicly.
Okay, so it's just your word. Okay, go on, continue.
You could ask the relevant teams. You could ask the Chapter 11 team for that data. You could ask anyone who has looked at that data. You could ask
I've just
DM'd
you.
You can look at the files that we submitted time and time again to verify.
Yeah.
Okay.
Chet, I've just DM'd you as well the data now, so you can check your DM. So go ahead, Sam.
Yeah. So from a trading and volume perspective, it was the case that Alameda had become a fairly small fraction of FTX's overall activity. Now, obviously, that was not true, as it turns out, when you looked at Alameda's positions on the exchange. And again, like, I've made a lot of mistakes here, and that was certainly one of them, was not paying more attention to balances and positions. I was looking at volume because that's what drove revenue, and that's what to me seemed to be driving like business growth. And so I was looking at volume broken down by by account, but also by geography, by source type, by product, growth over time relative to other venues, and there is nothing that was a real. There's nothing alarming happening in those trends. Obviously, in terms of positions, there was. In terms of the on-chain deposits and withdrawals, that's actually, I think, a little bit of a different thing, which is neither of those two. And I think is related to the fact that, Alameda used FTX to convert between different stablecoins a fair bit. And also, there were a lot of, so one thing worth knowing here is a lot of the relevant wallets got misidentified on things like Chainalysis between Alameda and FTX. And some of these wallets were basically what FTX was using to convert between two different stablecoins. So if a user, deposited a lot of BUSD and then wanted to withdraw USDC, there would have to be basically, and if the reserves were mostly in BUSD at that point, there would have to be a redemption of USD and then a creation of USDC, which would be sent back. And so that activity represented a fair bit of blockchain-based stablecoin deposits and withdrawals to and from FTX, although it was fairly separate from the rest of what was going on.
In what way were you?
Sam,
what way were you protecting? Sorry, Mario, stop that. In what way were you protecting customer assets?
Sorry, are you? When you say
in what way was
like,
FTX protecting customer assets? Which way did you ensure the protection of customer assets?
So there were some ways that we did. Obviously, there are ways I deeply, deeply wish that I had done way better at, and deeply regret what happened. The ways that I had been focused on it the most had been looking at a combination of basically of looking at the cybersecurity side, ensuring that there weren't hacks on the wallets, keeping a counting of the assets, making sure that that didn't deviate from what some balances was, getting gap audits at the end of each year, and also just dealing with, frankly, a lot on the fiat deposit withdrawal side, where customers would be trying to send money to and from the exchange.
And you just mentioned auditors there. Who audited your finances?
It's So I'm not 100% sure if it's public who that is. I can say so after, presuming that it is. I think probably
So
someone here can confirm
was
that it is
Prager
public. But
was Prager Metis a
that is correct.
auditor? Okay.
Yeah.
And where are the headquarters?
I'll give Rand. Rand, you want to ask a question? We'll give it back to Chet.
I'd like to finish what I'm saying here first, and then
okay, go ahead.
Where are
Go
they
ahead.
headquartered? The interruptions really aren't helping. Where were they headquartered?
It was a U.S.-based firm.
Okay. And now, the Bohemian securities regulator issued a statement on November 17th saying they ordered FTX to move, quote, Bohemian funds on November 12th. Is that correct?
There's a statement that was roughly, I don't remember the details of it.
Okay. And were you able to, you were the one who functioned this out, according to your statements to, pretty much everyone over the past few days. You functioned this out. Were you able to do this as you were still the controlling owner of Alameda and the debtor, or what gave you the capability to do this after the Chapter 11 was technically filed?
I don't believe that I've confirmed that as the one who did it, because I was largely not. But in addition to that...
But hold on a second. You have stated in your interview with Tiffany Fong just a few days ago that you in fact told them of your intentions to do this at least a day prior to them even making a request. Is that correct?
Sorry, intentions to do what?
To move the Bohemian funds. I don't believe I'm unclear on that at all.
That I told who to do that? Because I don't believe
the Bohemian regulators. You don't think that's correct? Okay. Would you? Okay. So hold on 1 second while I play for you your own audio, and for everyone listening, this is from an interview with Sam Bankman-Fried and Tiffany Fong from just a few days ago.
Withdrawals were opened first to citizens of Antigua or Bahamas, yes. Yes, and then the regulators or securities said that was not approved.
Yeah, I
Wait, sorry?
All right, so I gave them a heads up, a 1 day heads up that we were going to do it. They didn't say yes or no. They didn't respond, and then we did it. The reason I did it was it was critical to the exchange being able to have a future, because that's where I am right now, and you do not want to be in the country with a lot of angry people in it, and you do not want your company to be incorporated in a country with a lot of angry people in it. And so it was, realistically speaking, shitty, but the pathway forward for FTX involved Bahamians not being pissed at it.
Because I guess it could have been looked at as insider withdrawal sort of thing.
Oh, it wasn't insider withdrawals. No, this was trying to create a regulatory pathway forward for the exchange.
Just to kind of appease the citizens of the country that you're currently in, basically.
And that the company was about to be assigned a provisional liquidator. And
okay, so that seems to directly refute what you just told me, does it not?
Sam, you're muted.
Hey, sorry. The incident that you were referring to is a different one, I believe, or at least the incident that if you repeat where that came from, the incident that I believe, or sorry, start that question over again. I at least inferred that you're talking about a time when Bohemian...
I stated the Bohemian securities regulator issued a statement on November 17th saying they ordered FTX to move Bohemian funds on November 12th, so 5 days prior. And you have then confirmed that to Tiffany Fong, saying that you did move those funds.
No, those are referring to different
the Bohemian regulators.
Those are referring to two...
On November 12th were removed. You're saying are separate. So what was the separation? So you're saying, did you move citizens' funds and actually allow citizens to withdraw funds?
Hi.
In which incident?
Oh, I just wanted...
The incident in which you're referring to Tiffany Fong.
That was a separate thing where we briefly had withdrawals open for some Bahamian residents on the exchange. That is something that I think was, for a day or so before abuse of that forced us to turn it off, and is a completely... That was prior to Chapter 11. That was prior to any filings. That was when I was CEO unambiguously of all of FTX, and was unrelated to the other incidents that have been referenced in filings and other things.
Okay, so we have Tiffany Fong here as well. Was that your understanding of the conversation?
Yes, that was a separate question. It was not regarding the hack. That was about the reopening of Bohemian withdrawals. So I just wanted to clarify that. that was not in reference to the hack.
Guys, do you mind if I go back to just the beginning? Just say on the exchange there were spot positions and there were margin positions. Point, the exchange ran completely out of funds. What happened to the that had spot positions on the exchange? Because they shouldn't have been leveraged, right?
So there are a few answers to that. The first is that there were a number of withdrawals that did happen on the exchange. It is not the case that all of the funds were not available. I think we processed, I want to say something like $6 billion of withdrawals over a few day period. And so part of the answer to that question is that they were, a lot of those withdrawals were processed prior to reaching the peak of the liquidity crisis and prior to withdrawals being effectively halted. There are, I think, a bunch of other things going on as well there, some of which I'm still digging into, some of which I'm still piecing together. But yeah.
But Sam, let me just ask you a very simple question. If I'm a user of FTX, I deposited 1 Bitcoin into FTX on spot. I'm not a leverage trader. I just day to day use the leverage exchange. I'm just trying to understand where my Bitcoin is today. Just a little bit of clarity of was that Bitcoin notional Bitcoin on the exchange, but the money sitting on Alameda? Was my Bitcoin used as somebody else's collateral without my permission? I think let's separate the discussion between spot and futures. On futures, I understand that there could have been potentially maybe a margin mismatch. And I hear you, and I'm going to give you the benefit of a doubt because I think we had some good interactions, and I don't believe that you're an evil person. But I'm just wondering about the spot exchange, and that's people that didn't give anybody permission to use their money, but that money is no longer there anymore, right? So I'm just wondering what that money could be.
Right. So, one piece of this is that in those few days following the collapse, we processed about $6 billion of withdrawals, and those withdrawals in general were from a variety of sources, including some of those coming from futures position, from margin positions that were open, and that meant that that there was not a clear that effectively, I think, broke down some of that distinction between the two sources. Again, I'm trying to I'm trying to piece together all of what happened, and I don't have access to to put all of it together right now. But my best guess is that was at least a significant part of it.
So the hot wallets between futures and spot were commingled.
Why are we just allowed?
Yeah, so it sounds to me like
between futures and spot, those were commingled, right?
That's right. Yeah, in general, balances were treated as effectively fungible with each other.
Okay, now wait. I just want to with that in mind, I just want to try and understand something. So I put money I want to deposit money into FTX. I deposit money into Silvergate Bank, which is a United States bank. I put the money into the bank. That money lands up in Alameda's bank account, right? So now you've got, let's say I take $100, I deposit $100 into FTX, but what I actually do is I'm depositing into Silvergate's account on Alameda, and the account name is Alameda. So now Alameda has $100 of my money, and then I want to buy a Bitcoin let's say I put $20,000 in and I want to buy a full Bitcoin. The money is, tell me where the money is sitting now, though, because this is the part that I'm confused about.
Yeah, I'm not surprised you're confused because it's confusing, and it confused me, and there were a lot of poor decisions made there on our part. My understanding, and again, I'm not 100% confident in all this. I am still trying to piece together all of this, again, without access to data in retrospect. But my general understanding is that, and here you're referring, I think, to the especially the sort of 2019, 2020 era, where there were no FTX bank accounts, but where some customers were wiring straight to Alameda Research.
I'm trying to work out if the money ever left Alameda and was stored in a custodian somewhere else, which really represented a balance on the exchange, or whether there was a money deposited into Alameda, which we'll talk about in a second, and then you just gave me a notional balance on FTX, which was just a digital number on a screen, and you let me use that money to trade potentially notional Bitcoin, because actually I didn't have physical balance on the exchange because the money was sitting in an Alameda account. That's the part that I'm trying to understand.
Right.
Because that would make sense as to why Alameda had so much money to invest in projects and FTX didn't have any money to pay out to customers, right?
Yeah, so I believe that was part of the story. And again, I'm not 100% confident. I'm working with what I have here, but I believe that what you said is effectively part of what happened. I'll give one caveat to it, which is that I believe there was a ledger transfer away. It wasn't just a pure crediting of the customer on FTX. There was a transfer from one account to another, but that debit didn't clearly show up as a debit on Alameda's main account, and so did not clearly add on the dashboard to the risk of Alameda's position, which is one of the things that led to me being surprised by the size of the position.
Because that makes sense as to why there were no more Bitcoin to withdraw, where customers like that I know had Bitcoin balances, because those Bitcoin actually didn't exist because it was just notional. You were just letting us buy notional tokens that didn't actually really exist.
Or another way of phrasing that.
Because otherwise you would have had to have the USDC somewhere.
Right. Yeah. I believe that what you're saying is in fact part of what happened.
Chet, do you want to continue with your questions, man?
Yes. So just to continue here. So when you're saying, I do want to go back to those funds that you moved to the Bohemian citizens. When you moved them, you were already aware of the issues of liquidity, correct?
So when you say move them, this was a question of which withdrawals in which jurisdictions were open when. There were other jurisdictions where withdrawals were open as well. It was not a single shut off on all process. But yeah, there were liquidity issues creeping up, and we had a staggered shut off effectively of withdrawals. There was not large size for what it's worth that went out there. Nearly the entirety of the withdrawals that we processed, I want to say something like 95%. I think more than 95% of the withdrawals were all done prior to any shutdowns. But there was a little bit left that came out from some jurisdictions, the Bahamas being one, Japan being another, given that Japan has segregated assets, and there may have been one or two other jurisdictions as well.
Why did you allude to saying that you moved those funds to appease Bohemian authorities by ensuring that Bohemian citizens wouldn't be angry at you for losing their funds, specifically in this context?
So I wouldn't say I moved them. I mean, it's a question of whether to close withdrawals, and it was accounts choosing whether or not to initiate withdrawals. I wasn't initiating them, but yeah, that was one of the jurisdictions that we were last to turn off withdrawals in. That is correct, and it felt appropriate given that was where our primary regulator was. That's where our headquarters was, and but after about a day of that, we started to see some signs of people trying to abuse it, and we shut it down.
Sam, just one question. You guys
I jumped out. Go ahead, Chet.
Sam, you claimed that FTX US and FTX Japan are entirely solvent and also entirely separate from the rest of your companies, correct? I think everyone would be interested to hear why you filed for bankruptcy for both of those, not just FTX US, but FTX and Japan. Why did you make that decision, regardless of the time that you made it? If you knew these were entirely solvent, why wouldn't you have argued to keep them out of the Chapter 11?
I argued for quite a while to keep them out. In the end, I was informed in a way which I no longer believe was true, that this filing would not mean that withdrawals would be shut off there, that this did not mean a bankruptcy filing, that it was just a provisional step, but that appropriate and responsible steps would be taken in those jurisdictions. I am surprised at what happened after my filing. I don't know why that's what happened, and I regret it.
Okay, and just to go a little bit further there, so you specifically though didn't file FTX Digital Markets, right? FTX Express Pray and at least two other entities in the Chapter 11.
Right.
If you were able to choose not to file those, how come you
so
couldn't for the U.S. and Japan corporations?
I wish I hadn't. I wish that I had done what you're saying.
I'm not asking what you wish you could have done. I'm asking why you didn't.
The reason that I didn't file those in particular was those were entities where local regulators prior to my filing had already stepped in and initiated their own processes. And so I couldn't have, even if I had wanted to, for those entities.
And that includes FTX Australia?
Yes.
You also said that 8 minutes after you filed the initial motion for Chapter 11 bankruptcy, $4 billion more of liquidity basically was called in. Someone said that they could give you that cash injection. Is that correct?
I don't dispute that I've said something like that.
But did you actually get the liquidity of $4 billion offered to you 8 minutes after you filed the Chapter 11? So that would have been 4:38 in the morning. Did you get that actually offered to you?
Yes.
By whom? Can you state?
I cannot.
Okay. Why haven't you filed a motion to voluntarily dismiss the bankruptcy cases under U.S. Bankruptcy Code Section 1112 if you believed that you could save the company through that cash injection, and you also thought that FTX US and FTX Japan were fully solvent?
I acknowledge your question. I want to make sure that I operate in a responsible and compliant manner here. I would be discussing what would or would not be appropriate with counsel, and at the end of the day, I think that the right parties to be filing here would not be. I think that the right parties would be regulators, administrators who are overseeing this internationally, who have been leading the charge. But I acknowledge your question there.
Okay, so you're saying essentially that's a non-answer, right? Like, because you didn't say why you haven't filed that motion. You just said you would talk with counselors about that. What counselors, who are you paying? Like what does it cost you right now for counsel, and how are you affording that? Given you said that you were essentially cash poor, although you said you also had potentially up to $100,000 left.
That's something I'm trying to figure out right now.
So you have them on retainer without actual payment?
I can't go into the details. There are also potentially various relevant D&O policies which are being examined as well. But frankly, that is a concern for me.
Okay. And what funds were lost in the hack, and from what entities that you're aware of?
I don't know the details of that. That happened after the Chapter 11 team.
Okay.
But I think to my knowledge, this sort of on-chain analytics, as long as you make sure to distinguish between the various custodial processes that were taken, then to my knowledge, have done a decent job of tracking what that was, but I don't know a ton more than that.
Okay, but you said that FTX US lost $250 million in the hack. That was a statement from you. Correct?
When did I say that?
You said that in the past few days, literally. So if you said that FTX lost $250 million was the hack, where are you getting that information from?
So I would be surprised if I'd said that it had done that. I think I wouldn't be surprised if I'd speculated that maybe the notional of it was something kind of similar to that based on what had happened on chain, but I don't think I know exactly how much it was or from exactly what entity.
Okay, but if you're assuming that much, and Arkham Intelligence also reported that around $204 million of funds were moved off of that U.S. exchange to Alameda just a few days prior to the bankruptcy. Does that mean there's a plausibility of a $500 million hole at FTX or at US, or does that mean there's just a plausibility of a $250,000 hole?
So I will make a few notes. This is all as of when I had last looked into it, and my data is somewhat stale here, so I'm just guessing as best I can. First of all, the funds moved off. There are also funds moved on. There were a lot of deposits and withdrawals on FTX US from many customers, including Alameda. But those were fully solvent accounts, and to my knowledge, all of the customers ended positive on FTX US, such that there was no hole created by any of that activity. There's not an equivalent of what happened on the international exchange, so that part would not contribute to it. In terms of the hack, I don't know how much that came from FTX US. I might be knowable from looking at on-chain activity. I had believed FTX.
I've lost his audio. Is it just
yeah, no, it's me too.
Oh, sorry. Yeah.
Oh, you're back.
Okay,
Sorry,
Sam, we
Sam,
just lost you there for about
you
we lost you there
cut
for about
off.
10 seconds.
Yeah. Yep. Sorry, I'm back. But I had and basically like to my knowledge, I think that there were substantial surpluses there, such that I think it would still be to my knowledge, solvent. Although again, I don't have access to current data.
Okay. All right. And
hold on that point. Sorry, on that point regarding the US customers. So I know Altcoin Psycho pinned a tweet, and I know many people that are in very similar positions. He says, "What about the thousands of customers who did an ACH withdrawal pre-bankruptcy announcement and never received their money in their bank? Surely, if FTX US was fully solvent, the bank account used to process the ACH withdrawals should have continued processing."
Are these ones that were processed shortly prior to that, or that were processed
before? Yeah, just shortly prior to the announcement, there were a whole lot of customer withdrawals, and those just stopped being paid.
So I can't speak to the actions taken by people who are running that business right now, or what decisions they are or aren't making. Just my belief that there would exist the funds to pay out to customers were that to be the chosen pathway. But I can't speak to which decisions are being made about whether or not to choose that pathway.
But some of these were done days before. Some of these were actually done days before.
I mean, I don't know the details of individual transfers. ACH transfers can take a week to clear sometimes. But again, I don't have access to look into individual ones.
I mean, they can take a week to clear. I agree with you that they can take a week to clear. That's not a problem. But once they are in the system, it's just a case of clearing. It's not a case. It's if the transaction's in the system.
That's a chargeback.
From a solvent entity. From a solvent entity.
There were lots of customers charging back to FTX US every day, attempting to ACH in and then retroactively cancel those. Those were solvent customers, although dicks. I don't know the details of this system, but in general, U.S. fiat transfers are quite messy, and for both ACH and credit card related transfers, it is very difficult to have confidence in a transfer until as long as a month after it's been initiated. So that is a mess.
Sam, can I ask you a question? And I don't want to interrogate you and ask you specific questions, but trying to understand 29-year-old dealing with the collapse of an empire, which affected probably in excess of 10, 20, 30, maybe even 40 million people and a whole industry around it.
I wish we had that many
knocking off billions.
But
still, I mean, your customers, etc. But okay, millions of customers. Trying to understand, as a 29-year-old, who was around you? Who were the 5 people that you were calling and speaking to? And I'm trying to get a feel for the type of discussions that were happening as this whole thing started to collapse. Trying to get a feel for what were the top 5 numbers that you were calling? And I'm trying to get a feel for what they were telling you to do.
So it's a good question. And, there was a crew of employees, working around me to try to do what we could. I was calling a number of prospective funders to investigate, potential opportunities to.
But who were your confidants? Who were the people that were guiding you? Like, I know when something happens to me, I've got 5 people in the office who are really close to me, and I know who they are, and they're partners, and they know that they're brothers for life. Who were you phoning? Were you phoning Caroline? Were you speaking to Gary?
Gary, and Gary being a childhood friend and a co-founder as well. Sam, I'd love to know more about his involvement.
So, I mean, I was calling basically, calling and or speaking to in person, primarily other core employees of the company, other employees who had, relevant stakes in it, who had, relevant thoughts, but it was, as the core employees were the bulk of who I was, counseling with. Then I did call, some external advisors, a few key investors. I called a few.
What about Caroline? What about Caroline? Were you speaking to Caroline during this whole thing? I mean, were you guys aligning on exactly how much money Alameda had and what the value of the positions was? Because, ultimately she was a CEO. I mean, how many times where was she on the list? In terms of frequency, was she number 1? Was she number 3? Was she number 5?
She was not physically in the same place as me when this is happening. So there were, a fair number of phone calls, to do exactly what you said. Like as soon as this happened, one of the first things that we said was we need to know exactly what the deal is with not just Alameda's balances and positions on FTX, but everywhere. We want to know exactly what funds there are. We want to know, whether margin call will be able to be hit. We want to know how long it would take to deliver those. And so there were certainly a lot of conversations, with her around that. Although she wasn't physically in the Bahamas when this was happening, and so I was, speaking more frequently in some sense to the employees who were there.
What about Dan Friedberg?
I don't want to, I think, go into where specific employees' heads were at, just because I think that's for them to talk about it if they want to.
But was he one of the top 5, or was he one of the top 5 people that you were? I mean, he was a big advisor, wasn't he?
Yeah, he was a big employee of the company, a big part of our legal team. I think that everyone sort of in those positions were people I was trying to consult with, and I don't want to sort of go into details of where they were at unless they kind of give me permission to do so. But you can look through who were, the core developers, the core people on the legal side, the core people on the ventures M&A side, and on customer support, VIP support. Like all of those people were sort of huddling around to some extent, and trying to figure out like what the right things to do were. But at the same time, I was not as communicative to some of those as I wished that I had been. I was, including some people on that list. And I think in retrospect, that was a failing of mine as well. I was very nervous to say something company-wide that, both because I wanted to make sure I didn't say something that I didn't believe and I wasn't sure what was happening. Like I was trying to figure it out in real time, but also because at some point, everything that I said started leaking out pretty quickly. And so it sort of broke down the ability to have that much of a distinction between company-wide communications and public communications. But I think in retrospect, I wish that I'd just been, saying what I knew when I knew it pretty transparently, and accepted the fact that I was going to guess wrong sometimes, and the fact that a lot of it was going to get out publicly, because I think I owed it to the employees who had been fighting with us for years to tell them what I knew when I knew it, even if I wasn't confident in it.
All right. Chat, I'll let you continue with the questions.
Yes. So Reuters reported $10 billion in funds. We really need to get back to this point. The $10 billion in funds were transferred without FTX customer knowledge to Alameda from FTX. Ellison herself said this in a statement, right? So is it true, or that you or the team had management of the controlling owner, right there, move these funds regardless of method from FTX to Alameda?
So I do think that there was, Alameda ended up with a substantial margin position open on the exchange. I think that, just the over collateralized margin position was a fair bit of it. I think that the avenue that Rand talked about with the historical wire transfers was part of it as well. I think, you add those up and I think you probably get to most of it. Although again, I don't have all the data right now, so that's sort of piecing it together. And a lot of these
where did the funds come from that Alameda was able to margin?
Sorry, that when we say that they're able to margin.
Yes, because that margin is a loan, effectively, correct?
Yep.
Alameda. Where did the funds come from for that loan?
they were, and the collateral came from assets that Alameda owned, and the liabilities were, a short margin position open on FTX, coming from the assets that FTX had.
And how did you know this much about this move, even though you said you didn't know there was that much on the sheets?
Oh, a lot of these are things that I have pieced together after the fact that I did not know at the time, or was not fully aware of at the time. This is sort of a hodgepodge of things that I knew, things that I didn't know, but have since found out, and things that I'm guessing at, given what I've been able to find out, but I'm not entirely confident in.
Were FTX consumers made aware of this?
But Sam.
Yep.
Just before, I want to go on that specific point. Alameda, is it possible that Alameda was withdrawing real dollars from FTX and instead putting FTT as collateral? So almost taking FTT, putting it as collateral, and then withdrawing real dollars in exchange as against that FTT collateral?
Yeah, a lot of clients were doing that. I do believe Alameda was doing that as well, and was doing that for a substantial size.
Yeah, the size that I saw was more than they were supposed to have as unlocked tokens. Do you think it's possible that maybe they were leveraging more tokens than they had unlocked?
I don't believe it's more than were unlocked, because all FTT tokens are unlocked at this point. They're separately, so I think that what CoinGecko and CoinMarketCap sort of denoted as circulating tokens, I believe that was effectively not counting FTT tokens held on FTX. I think that's roughly how it was implemented, that it was because it's just done by looking at a set of blockchain addresses, and we're basically taking all tokens except for those on some specific subset of blockchain addresses. And I think what that was doing was just excluding at least some, if not all, of FTX's wallets from that calculation, and probably had been for a little while. So I think that the circulating supply calculations on CoinMarket and CoinGecko were, they're displaying a particular thing. I don't think that thing was necessarily what was the most intuitive thing, but all FTT had been unlocked for a little while.
Thanks, man.
And you stated in your text, leaked on Vox, that you knew deposits from FTX consumers were essentially lent out to Alameda, and that Alameda then invested with these funds, correct?
Something roughly like that.
Okay, and so you then would have had to been aware of that happening. In that report, now by Reuters, that we referred to back, it also stated up to $2 billion of those funds are now missing. When Reuters asked you about this, no clarity was given. In fact, you responded with 3 question marks. So I'm asking you in front of our audience here, the live crypto audience here, where did that $2 billion go?
I'm so confused. So first of all, I didn't say knew as of when that was happening. It's not clear to me what you were saying there in terms of when I knew that. But
I'm not sure that I answered your question, Sam. Can we just stick on that? I'm trying to keep this to where we can keep it very cordial and really inform the audience. So, in that report, it said $2 billion of those funds are now missing, right? From the 10 billion, they were released up to 2 billion, at least 1 to 2 billion gone from the balance sheet, disappeared. No one knows where they're at. Where did that $2 billion go?
I have no idea what that's referring to.
Okay. So you had no oversight of that much money being able to just disappear from one of your firms?
Wait, I'm not sure. Sorry. I'm not sure I'm even agreeing that is what happened. I'm confused by that statement.
There's a report from Reuters that says that up to $2 billion of the $10 billion that was moved, that you just said you knew was moved.
Which $10 billion that was moved?
The $10 billion that was moved to FTX without customer knowledge from Alameda to FTX.
The
$10 billion that we were just talking about, that you just said that you knew we were talking about. I don't understand the confusion.
I'm not sure about a 10 billion number. Sorry, if you could point me to this article, I think it would help.
Yes, anyone feel free to pin that Reuters article to the top of the space. So, all right. So we'll move past that for right now, and I'll go back to that in a second. In October 2021, you conducted a raise for FTX, correct?
I mean, there are raises over the course of 2021. Yeah.
Okay, but you did a specific raise with Sequoia and some others. 69 investors to be precise, including Sequoia, which called it a meme round. How much was that raised for?
I don't remember how much that round was. Was that the 400 million round, roughly?
Yeah, $420 at $420.69 million.
Right.
Raised from 69 investors, which is quite called the meme one. What were those funds used for?
Acquisitions.
Did you take any of that money?
Who is you here? Is you
SBF, Sam, the person I'm talking to. Did you take any of that money?
To my knowledge, that was used for acquisitions for FTX.
According to FTX financial records, internal records reviewed by the Wall Street Journal, actually 3/4 of that raise, $300 million, went directly to you from you selling some of your stake in the company. Where did that $300 million go?
Oh, sorry. The particular $300 million from the resale, that I'm not sure that's that same round that you're talking about. I think that it may have been that one. My memory is it was a different one, but you might be right. But either way, that was or slightly before that, I had bought Binance out of their stake in FTX for a few $billion. And then had resold a small portion of that secondary to investors. So it went to recouping the costs from buying Binance out.
Okay, and you said you didn't conduct any risk management at FTX and Alameda in all essence. When you said this in the New York Times Dealbook Summit yesterday, correct?
I may said I did I don't remember exactly how I phrased it, but I did way less than I should have.
You said essentially there was none. When you pitched your firms to accredited U.S. investors, did you tell them there was no risk management in place?
So there was some risk management in place. I myself did very little there. I wish that I had done way more, and I myself did very little in terms of appointing anyone to do it. Now, there was a lot of risk management that was in place in terms of automated, risk management systems, but there was not, in retrospect, good oversight of this. That was a big mistake. I don't believe that I made any material misstatements to prospective investors, although obviously I can't, I don't have recollection of everything that I said. Everything that I said,
What did you present to them as the risk management profile of FTX when you pitched to them?
I don't remember.
Was that part of it?
I don't remember detailed conversations about it. I'm not sure there weren't. There were a lot of conversations that happened. I'm not sure there weren't, but I don't particularly remember many.
So there weren't a lot of due diligence processes that took place?
And I think that there were due diligence on some things. I think there's a lot of due diligence done on. My sense
I think we lost Sam.
Oh, yeah, sorry, I'm back.
You're back. You dropped out 5 seconds. Yeah, go ahead.
All right. Continue,
My
Sam.
sense is, and I don't want to put words in other people's mouths, but my sense is roughly that when people were doing their diligence here, that prospective investors were thinking of it primarily from the perspective here. They were looking at the upside here. They were looking at, what could the business become? How could it grow? That's what you generally do as a venture investor. And if you are, primarily concerned about, the downside of venture investment, that probably means it's an investment that you don't want to make and aren't going to bother investigating in the first place.
So, so the point that you're making is that they didn't need to look into the risk management profile?
I'm not necessarily saying they didn't need. I mean, I don't want to make a statement about what they needed to or didn't need to do, but I think from their perspective, that they saw themselves as, I would guess, as primarily looking into what is the upside of this business, and.
Okay. And did I lose you there?
Yeah, sorry, but
it stops.
But at the end of the day, obviously, I don't want to talk for them. They should talk for themselves.
Okay. And did you ever update your investors on the status of your risk management profile?
I don't remember having like a specific, update specifically related to that. I don't remember everything that's been said, but I'm not sure exactly what you're getting at there, or if you're asking like, did I have a special session where called like update of risk management? Like, no.
Did you have any regular meetings with your investors?
Yeah, we would have a call every few months to talk about the business.
Okay, and the ways that you were controlling customer assets or anything like that just didn't come up, is what you're saying?
I don't think it particularly did.
Okay, so that interesting. Now, yesterday in the New York Times Dealbook Summit, you made an interesting statement. So it kind of stuck out to me. You said you, quote, marked the assets Alameda used as collateral. How then were you not aware of the size of Alameda's FTT collateral then? And wouldn't this mean that you had access to Alameda's bookkeeping?
Sorry, you said that at the Dealbook Summit, I said...
You said that when you were asked about the marking of the assets and whether they were marked properly. Do you remember that question from Sorkin?
Vaguely, yeah.
Okay. And you responded saying that with Alameda Research, you marked those assets, and that would mean that you were the one who had determined the price of them on the book, correct?
We had algorithms which determined the price of those on the book.
Okay, so then what did you mean by you had marked the assets at Alameda?
I think I was... so I don't remember the exact phrase that I said. It may have been me just saying, like, we as in... like FTX, the product, we're marking all assets to mark prices. But I'm sorry, I actually don't remember exactly what I had said then.
Okay. But I said to you that you said that you had marked the assets. That is something that you said directly in response to his question as to whether you thought that they were marked properly. And you felt that you might not have marked them properly while you were marking them at Alameda, up against everything else. But in doing so, that would mean that, like, that is access to the books, is it not?
Sorry, so this is, to be clear, marking the assets of Alameda on FTX, right? Looking at the collateral that Alameda held.
No, this is just marking Alameda's assets. You didn't say anything about FTX specifically assets or Alameda's assets on FTX. You were specifically mentioning how much was marked as far as the collateral of Alameda.
Yeah, but I think that was implicitly the collateral that it had on FTX is my memory of what that was referring to. But I mean, either way, sorry, I can talk about what I actually think here.
Okay.
Which is that in general, like, FTX was marking assets to what their mark prices were, and that when I was thinking about the risk profile of large positions on FTX, and specifically of Alameda's position, which I was also surprised by the size of in retrospect, but in addition to that when I was thinking about not from a formal marking perspective, but from a just in my mind, how do I think about this? Is this something I feel nervous about? Is this something that I need to be investigating more perspective? That I was substantially underestimating what crash risk would look like. And I was thinking about, a 50% haircut as a substantial, very large haircut, rather than as, possibly even an underestimate of what would be necessary for a short period crash in some circumstances. So, I think it was, I certainly think that I made some big mistakes there in how I was thinking about it.
Okay.
Sam, sorry, it's running in.
Yeah, go ahead.
I want to. There were a couple of accusations about the way that you ran the exchange, and I really want to try and get to the bottom of it. One of the accusations was someone that went on to BitBoy show. I'm not sure if you heard the show, but he mentioned that FTX was creating more tokens than there were in circulation, or more tokens than they were given for their market making role, almost creating synthetic tokens and trading in these synthetic tokens that they never really had. And yet, you had some really convincing evidence he showed a little bit of like on-chain data in terms of, the number of tokens that they sent to FTX versus the number of tokens in FTX and the tokens that were returned. And his accusation was that FTX was trading synthetic or fake tokens to manipulate price. Do you think that could have happened?
Sorry. So I think that I frankly don't know actually exactly what you're referring to there. I'm sorry, did not hear that particular one. I'd love to look into that more if you could like send me a link to that and get back to you on that. But an FTX.
Let me just explain it to you again. Let me just explain it to you. Like for example, when a token gets listed in exchange, sometimes the token would be required to give the exchange to lodge certain tokens with the exchange in their role as a market maker. And this specific project claimed that you were selling more tokens than you had as a market maker. And when the time came for FTX to return the tokens to the project, there weren't enough tokens. And I'm just trying to understand, like, do you think that it could be possible that maybe you guys created, call it fake synthetic tokens, fake tokens, that kind?
So I think you're probably talking about Alameda there, not FTX, and I don't know the details of that. I'm sorry, I wasn't running Alameda, and but I can try and look into that.
Simon, I know you had a question as well.
Okay,
right, Simon.
No, maybe it would be good to look at some of like the key events, because obviously we've gone quite deep here into like the specifics around. I think maybe some of the things leading up to what got here, like starting at the Luna situation, a lot of people don't have real clarity on people's involvements in that. So one of the, like, Sam, it would be great to hear your perspective on, like, a lot of people believe that there was some efforts from people really exposed to Luna, to try and save Luna or and there was some renegs of certain agreements. My understanding was like Celsius, Galaxy, Alameda. Could you share with us like any of the things that were happening between those that were significantly affected? Because obviously this is the start of the story.
So I actually know surprisingly little about the Luna side of this. I don't, like, to my knowledge, neither FTX nor nor Alameda were particularly involved in Luna. Obviously the market crash was quite relevant for them in the industry as a whole. But I don't think that there's that much specific, if any, specific Luna involvement. I think that there were I guess I think that like there were a lot of, there are obviously a lot of blowouts in like borrow lending desks around then that came from sort of secondary exposure to Luna, flowing through Three Arrows and other places. But I don't know much outside of that.
Do you know like anyone that made significant money from the Luna collapse? Was there a way of like shorting the stable coin on using any of the products on FTX?
I think there are probably a lot of good arbitrages to do. Like, I do think that is likely the case, and I think that things were just like not trading really exactly in line for most of that period. So I think there are really good trades to do then.
Did you have any like meetings yourself or anyone in the team about, like with like Alex Majinski, people from Celsius, Novogratz, or any of these people that were deeply affected by it? Was there any kind of meetings that about where people were trying to figure out what to do? Because there's like rumors that when Celsius decided to try and get out for some of their clients, that was like a renege of some kind of agreement, and that upset a lot of people. Do you know anything about that?
I don't. Obviously I had some meetings with like borrow lending firms around that time, around the troubles they were facing, but I don't unfortunately know anything about things specific to really like the Luna side.
So I've got Simon. I've just sent you through a username. Chairman, I'll let you ask your question, man. Thanks for patiently waiting. Simon, I've sent you a username. Do you mind? Because my Spaces is glitching. Can you send them an invite up? I've just sent you the username. So to send an invite up, you got to click on the icon at the bottom, guests. Click on speakers and click on invite speakers and add the username. But Chairman, I'll let you ask your question, man.
Yeah, Sam, would you be willing to go on Up Only, hosted by Kobe and Ledger Status?
Potentially. I suspect that I have been messaged about that. I'm sorry, I'm still digging through my my backlog of messages. But I'll try and put that on schedule.
You gotta go on it. Come on.
I've got another question for you as well, Sam. The tweet. So while Simon invites a guest to ask you a couple of questions, and I know you have to go over in about 5 to 10 minutes. There was a tweet on 11th of October. At some point, I might have more to say about particular sparring partner, so to speak. But you know glass houses. So for now, all I'll say is, well played. You won. Most will assume this refers to CZ, and would love you to elaborate on this. It's been a while since the tweet.
Yeah, it was. I mean, look, mostly I screwed up, and like I feel incredibly bad about that, and it hurt a lot of people. And you know, whether or not it matters, I'm going to do what I can to try and make it right. And I don't want to try and deflect responsibility from that. You know, obviously there are other things that also contributed to what happened, and you know, there was a pretty sustained PR assault, which I underestimated, and you know, underestimated the impact of, and underestimated the execution of, and I think that was quite impactful, and was, you know, what sort of lit the match here. But that doesn't change the fact that I wasn't on top of my shit.
Hey, Mario, since he's leaving in 5 or 10 minutes, can I ask a couple of questions?
Yeah, sure. Go ahead, man. While we bring up the guest. Go ahead.
Fantastic. Hey, Sam, did you or any of your business entities or family members ever make any donations to political parties or politicians on the Bahamas?
I'm not sure, not to my knowledge.
You can't just say that answer that with yes or no?
I don't know of cases where we did. I mean, I wouldn't necessarily know if like someone had at some point made some donation on behalf of some entity. But like I don't know of that having happened.
Okay. Have you and your lawyers been in touch with the U.S. Department of Justice about your case?
I can't talk about, you know, any specific communications or lack thereof with specific, you know, regulatory agencies. But obviously we'd be, you know, looking to engage constructively if, you know, if and when that were to happen.
You know, the reason why I'm asking is in several interviews you pointed out that FTX US has enough funds to pay US customers.
Yes.
Is that a strategy to ensure that the US Department of Justice doesn't charge you with a crime because the DOJ doesn't have jurisdiction over foreign FTX customers?
I mean, it's a true fact. It's like FTX US was in fact a segregated business, and it didn't have, you know, any of the properties that led to the issues on FTX International. And so, you know, to my knowledge, it is solvent, and that doesn't take away what happened on the international platform. But I don't know, at least it's something.
Have you transferred funds to FTX US before the bankruptcy to enable this defense strategy?
No, FTX US was, to my knowledge, always solvent.
In some of the recent interviews, you used the phrase, "I don't have the details," 116 times. Why is it that you know so little about your own companies or even about the real estate deals that you facilitated for your parents?
So many of these things were things where I was not the one who was primarily doing them. And then many of these things are things where there exists data that would make it entirely possible to answer these questions. But unfortunately, I don't have access to that data right now. And you could ask the Chapter 11 team to try and get access to such data that might help answer some of these questions. But I don't have that data about my the companies that I started right now.
Okay.
I see, Kim, if we can give CoffeeZilla the mic after this question, if you don't mind.
Yeah, go ahead. Kim, last question. CoffeeZilla, the mic is yours.
Two more things really quick. So you keep saying that you want to help your customers getting their money back. What are the concrete steps that you are taking?
So, look, a lot of this isn't in my control right now. And, a lot of this is, going to be up to the, global administrators and regulators who are involved. But I'm happy to be of assistance to any of them any way that I can. And, in any way that they want me to be. But, I would be excited to be to the extent that, I could help find help put together anyways, or be a part of that to help make make customers more whole by probably by there being more funds for them to have access to.
CoffeeZilla, the mic is yours, man.
Hey, thanks for having me. I just wanted to quickly ask, so there's this big question about this $8 billion that went into some kind of a stub account. If I just want to get some clarification on this, from my understanding, what you're basically claiming is that back when FTX didn't have banking, you'd use Silvergate to have people to wire money to Alameda Research and then credit them on the FTX side, but you didn't actually account for that money going back to them. So essentially you had like $8 billion coming to FTX you didn't have on the books, technically. I mean, can you explain more how that worked? Because it seems like such a key part of this whole thing. And so far, we've gotten like very vague things about stub accounts. Just try to be as specific as you can on how that actually happened.
So, and again, some of these are things I'm trying to piece together that I don't have the full answer to. But I think that part of it was, I believe that there was, correct FTX accounting in terms of the audited financials, but that at least I can say that when you sort of pulled up on a dashboard what the accounts look like, it would not have it wouldn't have displayed those transfers, and it wouldn't have displayed the balances related to those, which meant that it was that the sort of what you would naively see as the relevant sort of position size was quite a bit smaller than what the full position size was.
Specifically, you're talking about the funds that went into Alameda that was credited to on the customer side on FTX.
Yeah,
you're saying that basically when you looked at your dashboard, Alameda was using those funds to trade perhaps, but that ultimately you couldn't see that on the Alameda side because there was some kind of an accounting problem where there was a mix up with where it was credited. Is that the story?
Yeah, it's something roughly like that, or at the very least that the common displays of it did not include that piece of the accounting.
A real quick second follow-up. So I've talked to a few Alameda insiders, and I've kind of run them by your story of things. I think you probably are aware. I'm pretty skeptical. And one of them, when I told them could it be that Sam wouldn't know about this? Somebody who worked with you, and they actually they laughed and they said, "There's no way he's claiming to be stupid now when he was like this genius wonder kid." And so my sense of things is, how do you explain this? How do you explain the fact that some of the people who worked with you for years, your employees, have come out and said, there's no way he didn't know about these backdoors. There's no way he didn't know what Caroline was doing when you guys were very close. The offices were right next to each other. I mean, how do you expect us to believe this story you're spinning?
I mean, I don't know what to say. I had a lot going on, and I was spread thin. I was a bit less grounded than I had been before, and I lost track of a lot of important things, and I think that those
hang on one second. I think spread thin is one thing, right? Like I think things can get out of hand, but we're talking about a fundamental understanding of whether Alameda was commingling funds with FTX. I mean, I saw your Stephanopoulos and Sorkin interview, and you're pretty categorical that you had no idea that you were mingling funds. So that's what I'm asking about, not like, did you know exactly what was happening on November 7th or 8th? I mean, I can understand sort of things getting out of control, but we're talking about the most fundamental grasp on how your business worked. You're telling us you had no idea.
I was not aware of a lot of what was going on. I was vaguely aware that some of these systems existed. I had no details of them, and I was not spending much time and on looking at position risk management. It was a big mistake.
I mean, we're right.
Right, Sam. I've just got I've just got a DM. Sam has to leave. So guys,
Wait, can I, Mark? Can I ask
guys, guys, I just got to end it, guys. So because Sam has been DMing me nonstop about having to leave, and I don't want to just drop out for the last 10 minutes, saying I have to leave. So Sam, the last question I wanna end it with is there's two camps right now. One camp is looking at this and saying, Sam. All right. So guys. So on one side, the audience, I'm looking at the comments, is like, hey, Sam is at least speaking despite lawyers telling him not to, and looking at this in a very positive light. On the other side, people are saying your answers are very calculated. You're dodging any tricky questions, and this is all part of a plan to paint yourself in a better light. And I do have to admit, there are some answers where they're very, very calculated, and you try to dodge them in one way or another. So to conclude it from my end, what's next? What's next for you in the next few weeks? What can we expect? And what can FTX customers expect? Because you did say that FTX US, they should be made whole. FTX International, I think 30 cents on the dollar. What can the people that were hurt by this, there's some comments about people, kind of hurts me to say this, but, talking about ending their life. And we've had some of these people on stage. What can they expect over the next few weeks and months? And that question is for Sam, just for all other panelists, please. Go ahead, Sam.
Look, I'm incredibly sorry about what happened, and I know that doesn't change anything. I'm going to do what I can, even if that's not much. But at the end of the day, hopefully there will be pathways that will be able to get more funds back for users. Hopefully there will be pathways that open up withdrawals where they can be, and that maximize the value ultimately that users can get. But in the end, that's a lot of that's not going to be up to me. I'm just going to try and be helpful where I can there. But I'm sorry.
Sam, you keep saying you can do what you can. What you're going to do as much as you can. You said it when the liquidator, when you went into Chapter 11. I'm trying to understand in your head what you think you can do in your current position, given the fact that the liquidators on both sides, well, the liquidators on the US side have said that you're no longer involved and that you no longer speak on behalf of the company. And I genuinely believe that you really want to help. I'm just trying to understand in your head, when you talk about doing whatever you can and trying to do it, what do you think is in your hands?
I am sorry, I'm very late for next call, so I do have to hop off now. But all I can do is I can be helpful to all the teams who want me to globally, and I'm going to continue to do that if and when I'm asked, and look for other ways over time that I can hopefully help contribute. But yeah, there's a limit to how much different groups are going to want me to, and I understand that.
Mario, can we keep the space open after Sam?